Good evening, sir.
Good evening.
So, if you want, you can start the class, sir.
Yes, yes. Just sir, wait a minute. Now let's start. We have discussed in the last class up to the current assets. And I think some of the part of fixed asset we have already covered. So now the features of fixed assets. Hmm? We have already done in the last class. Features. Okay. An acquisition cost we have already done in the last class. Or in the accounting paper number first, we have details and we explain in details what is the actual cost. Now, two type of fixed assets. Number first, tangible, or number second is intangible. So tangible assets means which can be touched, which can be seen, which can be measured is called the tangible assets. Here, tangible assets are those assets which are having physical substance. It includes the traditional item of the land, building, machinery, vehicle, fixtures, and computer equipments. Assets of accounting usually record these items at a historical cost. We have already discussed in the last class as well as the study material number first. Okay. So we have, I think, already covered. An intangible assets means which cannot be touched, which cannot be seen, which cannot be measured, and is called intangible assets. So intangible asset is an identifiable non-monetary assets or without physical substance. We have to create the value of intangible asset. If we purchase the intangible asset, so definitely intangible asset have the value. Physical substance held for use for the production or supply of goods or service, for rental to occur, for administrative purpose. The intangible asset include the patent right, copyright, franchisee, know-how, trademark, software, all are the intangible assets. As per revised schedule of 6 of the Companies Acts. So, whenever we prepare the balance sheet, as per the schedule 6, the normal method of balance sheet is a tabulation method. Okay, this is the asset side and this is the liability side. But whenever we prepare the balance sheet for the company, so we need to follow the rules and regulation of schedule 6. Under the schedule 6, okay, we prepare the balance sheet in the different format. Okay. In that case, I am not explaining the complete format. In that case, we have to show tangible asset, an intangible asset. Next is the capital WIP. And fourth is assets under development. Four option is there under the fixed assets. We have to separately show tangible, intangible, capital WIP, and assets under development not required for you. So here they explain that we have to prepare, as per Schedule 6 of the Companies Act, intangible assets are separately under the head of non-current assets. We have to separately show under the heading of non-current assets, tangible asset and intangible asset, and separate note prepared for the intangible assets. What is this separate note? But in the new format of the balance sheet or the company's format in the balance sheet, so we have to just show only one figure. So total of the intangible asset, this example is 1 crore. For each and every item, we have to prepare note number or notes of account. Okay, or we have to prepare schedule. So in the schedule or in the notes of account, we have to show here separately, other than the balance sheet, the total assets covered under the intangible assets. Now the total we will transfer in the main balance sheet. ठीक है ना? ये कहता है बेटा यहाँ पर. Separate notes prepared for intangible assets. Next. Now the depreciation. You all know regarding the depreciation. The cost of the fixed assets will be contribute to organization's ability to earn revenue for a number of accounting period. It would be unfair if the whole cost were treated as an expenses in the income statement in the year of acquisition. Well, you all know we have already discussed, and we two type of expenditure or three type of expenditure. Number first is the capital expenditure, or number second is the revenue expenditure, and number third is the deferred revenue expenditure. We already discussed. Capital expenditure incurred, we cannot charge in the debit side in profit and loss account. Only revenue expenditure, definitely we will directly charge in debit side in profit and loss account. But out of the capital expenditure, one of the part, according to the method of depreciation, we charge in the profit and loss account debit side, and remaining definitely we have to show in the balance sheet asset side. Because the capital expenditure means assets acquired to run the business for a long duration of period. That's why we cannot charge, we cannot write off whole of the amount of capital expenditure in 1 year. So that we have to calculate the depreciation. And we will charge only depreciation in profit and loss account out of the capital expenditure. Suppose we purchase the plant and machinery for rupees 10 lakh. So this is the capital expenditure. Out of capital expenditure, suppose rate of depreciation is 10%. So 10% of 1 lakh is 10 lakh is 1 lakh. So this is called depreciation, and this amount we will transfer in the profit and loss account, and 10 lakh minus 1 lakh and 9 lakh definitely we have to show in the balance sheet asset side. This is the treatment of depreciation. It would be unfair if the whole cost were treated as an expenses in the income statement in the year of acquisition. Instead of cost of a spread over all of the accounting period, which the asset is expected to be making a contribution to earning. That means the useful life. We will write off, we will divide all the value of assets according to the useful life of the assets. Okay? And the process by which this is achieved is called a depreciation. You all know the other definition of depreciation. Depreciation is the normal wear and tear charges. So depreciation is the reduction in value of asset is called the depreciation. Depreciation is the amounts which have been charged by the company from the assets. So depreciation is the amount of the reduction value of the assets. So as per the Companies Act 2013, the minimum depreciation rate are charged as mentioned in Schedule 3 under the Companies Act 2013. This is clear, beta? Well, from where we will use the depreciation rate. So depreciation rate is mentioned in Schedule 2 under the Companies Act 2013. We have discussed in the last class that in the financial accounting, we can use so many type of method to calculate the depreciation. WDB method, straight line method, annuity method, so many type of methods, machine hour rate method. But as per the Income Tax Act, there is only two specific method. Using two method, we can calculate the depreciation. Otherwise, we cannot charge any other method to calculate depreciation as per the Income Tax Act. Income tax says every company, every industry, every businessman have to charge depreciation using the WDB method except power generation company. So power generation company will calculate depreciation using the SLM method, but other than power generation company, the depreciation charge as per the WDB method. So whenever we calculate the depreciation for the income tax purpose, so we consider the rate of depreciation as per the Income Tax Act 1961. Or whenever we prepare the balance sheet for the company's purpose, for the registrar of company purpose, we can also say, or for other than income tax purpose. So we consider the rate of depreciation as per Schedule 2 of the Companies Act 2013. The depreciation calculated on the basis of life of the asset as per Schedule 2. And none of the basic rate of depreciation. But for the Income Tax Act 1961, for assessing the tax liability of the company have to use WDB method for calculation of depreciation. For power generation company, information is not given in our study material, so leave it. Whatever difference is coming in the depreciation as per the calculation under the Companies Act, under the Income Tax Act, the difference will be defined as a deferred tax assets and deferred tax liability, as the case may be, and shown in the balance sheet of the company. So now, beta, we have to think what is the deferred tax liability or deferred tax assets. If you pay the tax over and above your actual tax liability, so this is called assets, otherwise this is called liability. So definition of depreciation, you all know, we have already discussed. Depreciation is defined as a permanent loss in the value of the asset through wear and tear of the passage of time. Depreciation is the measurement of the decrease in the value of assets, or the consumption of the value of assets, or the value of uses through wear and tear. According to the IASC, International Accounting Standard Committee, depreciation is the allocation of depreciable amount of the assets, its estimated useful life. And depreciation for the accounting period is charged to income tax either directly or indirectly. Nothing is directly, beta. Everything is directly. Everything is transparent whenever we prepare the balance sheet. To follow the provision of the Companies Act 2013, the Companies Act makes it is compulsory to write off the depreciation on fixed assets before declaring dividend. Or as per the income tax also, to charge depreciation is a mandatory or compulsory for every company. Suppose, for the just example, income tax point of view. So charging depreciation is mandatory, compulsory. So suppose beta you have the assets worth rupees 20 lakh. And suppose rate of depreciation is using the straight line method 10%, so 2 lakh depreciation every year. If you charge depreciation in the profit and loss account, suppose, but this is your net profit 7 lakh before charging depreciation. Or if you charge depreciation in debit side and profit and loss account, so beta your net profit is rupees 5 lakh. So without charging of depreciation, you are liable to pay tax on rupees 7 lakh, but after charging of depreciation, you are liable to pay tax only on rupees 5 lakh. Okay. But suppose in any of the year, suppose you have a loss of rupees 4 lakh. In this year, now you are going to take the decision. You are going to your planning is in this year. हम depreciation charge ही नहीं करते. We don't charge the depreciation this year. If you not charge the depreciation this year, so in the next year, your value definitely will be increased. So in the next year, you will charge the higher amount of depreciation. You cannot do this type of practice, so that charging of depreciation is mandatory for every year. What is the causes? You all know. Number first is uses. Number second is the passes of time. Number third is the non-uses. Now, whether you use the assets or whether you not use the assets, once you purchase the assets, then definitely you can charge the depreciation. But if the asset is not in the position of use, then you cannot charge the depreciation for the taxation purpose. For the taxation purpose, the use is mandatory to calculate the depreciation. So whether you are using the assets or not using the assets, once you purchase the assets, then you can charge the depreciation. Okay. So asset depreciation when it is used, it also depreciate more than it is not used. So machine depreciate more with the passes of time when kept idle. When machine are not used and exposed to weather, they compared to when they are in use. Next, accident, exhaustion, obsolescence, and improper maintenance. These are the causes to charge depreciation. Already discussed. Now, need for providing the depreciation. To know the true result and the true result of the profit and loss. True result of what? True result of profit and loss. Assets are used as an important tool in earning revenue. Large amount are contributed for acquisition of assets. Definitely. If you contribute rupees, just example, 1 crore in the business, so definitely the major component of the capital you must have to invest to purchase the assets. And these assets are burned out in the proper of earning revenue. When the assets value decreases, the loss must be accounted for. Otherwise, the real working result cannot be known. Therefore, depreciation is taken as in the operating expenses and charged to the profit and loss account to arrive the true profit or loss of a business. Loss but is not given in the your study material, but loss may also be is the true results. You may face profit as well as loss both. Next, to reflect the real value of the assets, balance sheet has to be reflect true financial position. To have a true value of business, depreciation have to be charged on the original cost of the assets year after year. Historical cost concept. To replace the assets, the value of the asset decreases year after year. When the assets become obsolete, is need to be replaced. So by making depreciation annually over the life of the asset, it has become easy to replace it with a new one to making the provision for replacement of that assets. If the depreciation not charged against the profit every year, a business may be find it's difficult to build the reserve to replace the assets. Now to follow the provision of Companies Act not 2015, the Companies Act 2013. The Companies Act make it compulsory to return off depreciation on fixed assets before declaring the dividend. This is the multiple choice question. Okay. So in this case, company dividend cannot be declared unless depreciation is provided. Clear? Now, how to calculate the depreciation? While calculation of amount of depreciation, the following factors are normally taken into account. Original cost of the asset, which include the actual cost price, plus installation charges, plus additional and improvement of the asset we have already discussed and at the time of definition of actual cost. Now to ascertain the estimated life of the assets in the number of year or the product unit based on the effective service, on the residual value or the scrap value, realizable value is also we have to consider. So there is a three basic important term which is required to calculate the depreciation. Number first is the actual cost. How to calculate actual cost? Purchase price of the assets plus all expenditure up to the installation plus all additions and the improvement. Now we have to calculate the estimated life of the assets. And now the third, we need the scrap value, remaining value or residual value of the assets at the end of the year. By using the three terminology, we can calculate the depreciations. In your study material, total 10 method of depreciation is given. Number third, fixed installment method like SLM method, diminishing balance method like WDB method, annuity method, insurance policy method, sinking fund method, revaluation method, machine hour rate method, kilometer method, depletion method, and sum of digit methods. But generally, first two method is most common method. Most of the industry use in or only first two method SLM or WDB, but under the Income Tax Act, the approved method is WDB except power generation company. Clear? Now under the straight line method. In this method, the amount of depreciation we will charge equally every year up to the life of the assets. So this is called the straight line method. Under this method, a fixed or equal of depreciation is charged at the end of the every year during the economic life of the asset till the value of the asset becomes zero or attain its scrap value. Okay. Under this method, the amount of depreciation remain the same in all the year up to the life. Okay. But there is some features is given. Okay. Very easy, very simple to calculation. It is suitable to those assets whose uses uniformly year-wise years. It also suitable for such asset whose economic life easily determined. The value of assets under this method can become zero or their estimated scrap value. It is the method which is recognized by the Companies Act. The assets value keep or decrease, but the depreciation amount remain the same every year. It is difficult to compute the depreciation amount upon any addition of the asset during the year. This method do not provide any provision of the interest on capital, whereas it is invested in the fixed assets. Quantum of the depreciation may be bulk, ठीक है ना, out of the following. How to calculate? Original cost of the assets minus scrap value divided by estimated life of the assets. This is the method, this is the procedure to calculate the depreciation. Now, a machine costing rupees 50,000 is purchased on 1st of Jan 2018. Its useful life of the machinery is 4 years. Its residual value is 10 years, 10,000 after 4 years. Compute the rate and amount of depreciation we assume. लिख लेते हैं यहाँ पर. Assume 31st December is the last date. We assume just. Then how to calculate the amount of depreciation? The formula is given. Original cost of the assets. And how to calculate the original cost? Purchase price of the asset plus all expenditure up to the installation. All the expenditure up to the installation we have to add in the cost of the assets. Then how much cost is given? 50,000. And the scrap value or the residual value is rupees 10,000 is given and divided by life, and life is rupees kitna beta? 4 years. Then the depreciation amount is rupees 10,000. Now, how to calculate the rate of depreciation? How to calculate the rate of depreciation? Amount of depreciation divided by actual cost of the assets and multiply by 100. So rate is the 20%. How to calculate the depreciation? Original cost minus scrap value divided by life. And how to calculate the rate of depreciation? So amount of depreciation divided by original cost and multiply by 100. So this is 20%. Okay. For the accounting purpose, we have to prepare number first is the assets account or number second is the machinery account. Okay. In question number second, a machine was purchased on 1st October 2018 for rupees 50,000 and 3,000 was spent on its installations. So we have first calculate the original cost. What is the original cost? 50,000 plus 3,000. So total is the 53,000. Depreciation is at the rate of 10%. And the books are closed on 31st March every year. So the machine account for third year. This is the actual cost. If the data is if the rate of depreciation is given, so directly calculate the rate. ठीक है ना? Directly calculate the amount of depreciation as per rate of depreciation on original cost. First rule. If the rate of depreciation is given, so calculate the depreciation as per the rate on the original cost. Number second case. If the rate of depreciation is not given in the question, not given, so life must be given in the questions. Life have to be given in the questions. In that case, how to calculate the depreciation? Original cost minus scrap value and divide by the life. Two concept is there. Suppose in the question, method of depreciation is not given. Method is not given, but the life is given. Then you can calculate the depreciation using the straight line method. Or if the life was not given and only percentage is given, then in that case, you can charge the depreciation using the WDV method. Hopefully this is clear. Now, question is कि machinery purchased on 1st October 2018 and the books closed on 31st March. So in the first year, we have to charge depreciation only for October, November, December, January, February, and March. Well, in the previous year, in the financial year 2018 and 19, we will charge depreciation on original cost. How much original cost? 53,000, 50 plus 3 at the rate 10% and only for 6 months, to 6 divided by 12. 6 divided by 12. Now how much? This is the 5,300 and divided by 2. So amount of depreciation is 2,650. In the year 2019 and 2020, the depreciation amount beta kitna hoga? 5,300. Because the method is a straight line method, directly charge 10% on 53,000. In the year of 2021, so depreciation is the same, 5,300. Question says, so the machine account for 3 years. So the machine account for 3 years. But at the time of purchase of machinery, now the general entry is machinery account debit for rupees 50,000 to bank rupees 50,000. This is the first entry. At the time of purchase, the 1st of October 2018. At the end of the year, 31st March 2019, definitely we will charge a depreciation. So entry at the time, at the end of the financial year, at the time of charge depreciation. So now the entry is depreciation account debit to machine. This is 2,650. This is 2650. This is a journal entry. Now we have to prepare machine account. Machine account means machine ledger. We have already done the chapter of ledger in the first book. So this is just only ledger, a ledger of machine. Ledger is divided into two parts, debit part and credit part. We have already discussed. Date, amount, GF number. So date, particular, GF number and amount. Date, particular, GF number and amount. Now we record the first entry in the machinery account on 1st October 2018. What is the entry? Entry is machine account debit to bank. So we have to record in debit side in the machinery account with the opposite side name. क्या क्या लिखेंगे बेटा? To bank. How much? 53,000. Suppose in your study material or in any of the book, there is a two type of transaction mentioned here in the machine. Original cost 50,000 and installation 3,000. This may also be possible, but this is not looks like good if we record two transactions in the machines. Because at the time of purchase of machinery, we have to include all the expenditure to record the entry in the books of account. That's why we directly recorded 53,000 rupees. Now at the end of the year, so end of the year is the 31st March 2019. We have to charge depreciation. So depreciation account debit to machine. How much? This is 2650. Now at the end of the year, 31st March 2019, we have already covered balancing of account. How to balance? By balance CD. 53,000 minus 2650. So balance is 50,350. Now just make the total of debit side and credit side. This is 53,000 and this is also 53,000. Now on 1st of April 2019, the closing value of the machine we will transfer on 1st April 2019. So this is to balance BD. This is 50,350. On 31st March 2020, at the end of the year, now we will charge depreciation. How much? This is 5,300. Only first year, because we purchased the machine on 1st October 2018. In this year, we charge depreciation for 6 months because 1st October to 31st March, the duration is 6 months. But in the subsequent year, we charge the full depreciation. So full depreciation using the SLM method is only rupees 53,000 every year. Now, balancing the ledger, 31st March 20, by balance CD, 50,300 minus 5,300. So remaining is the 4,500, 45,050. On 1st April 2020, to balance BD, this is 45,050. Now we will charge depreciation 31st March 2021 by depreciation. How much? The same amount is rupees 5,300 because the method is the straight line method. So now on 31st March 2020, by balance CD, 45,050 minus 5,300. So remaining is 39,750. Now the closing balance definitely will become opening balance on 1st April 2021. So to balance BD, this is 39,750. Prepare machine account for 3 years. So this is the first year, second year, and 3 year. This is beta SLM method. Number second, WDB method. Under the WDB method, we charge depreciation on the remaining amount. Well, after charging of depreciation on the reducing amount after charging of depreciation. So this is called the WDB method or diminishing balance method or decline charge method. So many type of method use a word you can use. This method is also called decline charge method, reducing by installment method, fixed percentage on decline based method. Under this method, depreciation is component as a fixed percentage on the written down value of an asset every year. In this year, amount of depreciation is every year reduce, reduce, and reduce. Under the SLM method, the depreciation is constant for every year. So depreciation is calculated in the book value of every year. The amount of depreciation of the asset will not be same in each year. It goes to reducing every year, but the percentage is fixed. Depreciation provided till the WDB of the asset become negligible. Okay. These are some features is given. This method suitable for those assets whose repair maintenance increase as they become old. So we just read the features. Now, the same question number second. Okay. I'm just calculating the amount of depreciation using the WDB method. Okay. Original cost is 50,000 plus 3,000 for installation is 53,000. And machine purchase on 1st October 2018. So in the year of 2018 and 2019, we will charge depreciation for 6 months. That is 1st October 2018 to 31st March 2019. So in this year, the depreciation is 53,000 into 10% into 6 divided by 12. So this is 2650. Now in the year 2019 and 2020, Now we need to calculate the WDV, written down value. In this year, the WDV is 53,000 minus 2650. This is 50,350. Now in this year, we will charge depreciation at the rate 10% of WDV. So how much amount of depreciation? This is 5035. Now in the year 2021, the WDV for this year is 50,350 minus 5035. 50350 minus 5035. Now the WDV is, this is 45,350. Now the depreciation in the year 2021 is 45,315 into 10%. This is 4532. Under this method, we will charge depreciation on the reducing balance, on the diminishing balance, or on the written down value. So every year, the amount of depreciation will reduce. So this is the WDV method. You just go through the features of WDV methods. This is the calculations, how to calculate. We have already covered. Machine hour rate method or unit of production method. Some fixed assets depreciate according to their uses. If the asset has a machine is a measurable life in terms of number of hours, it is likely to be used, or the number of unit of output is likely to be produced, it can be depreciation according to that rate. Just example. One of the machinery having capacity to produce 50,000 units per annum. And company use full capacity. And the cost of the machine is rupees 5 lakh. Then how to calculate depreciation? How much you have total spent? 5 lakh rupees. Out of the spend of rupees 5 lakh unit, we will produce 50,000 units. So now the rate of depreciation is rupees 10 per unit. In place of units, suppose the same example. Machine have the life of 50,000 hours. The total life of the machine is 50,000 hours. Then the depreciation is 5 lakh divided by 50,000 hours. That means rupees 10 per hour. Well, if we run machine for 1 hour, then 10 rupees is the depreciation. In this method, if we produce 1 unit, then depreciation is rupees 10. So this is the machine hour rate method or the unit method. For example is given, check करना. The revaluation method. This method is calculating depreciation, differ from the straight line and the reducing balance method, but not being a calculation based on the original cost of an individual assets. Instead of this method lies as an estimated cost being made in respect of the group of similar small value of assets when preparing the financial statement. Well, we need to include all type of all type of small type of value of asset, then we will charge the depreciation. So this is called the revaluation method. Accounts of the disposable of a fixed assets. At the end of the asset's life, we will either abandon or the sold. So this is not at the disposable purpose accounting. ठीक है, just better. Okay, now remaining method is not explained in your study material. So I think these are the method is not very important. So last concept in your study material, the project accounting. What is the meaning of project accounting? Project accounting differ from the standard accounting in that it is designed to monitor the financial progress of a project rather than overall progress of the organization element. Suppose beta one of the organization run different type of project. Project A, project B, project C, and project D. Suppose this is the builder. And construct different type of building complex in different type of locations. So each project, ठीक है ना? This is called the project. So in that case, we have to record, we have to prepare the accounting only for the project wise, not overall business wise. So with project accounting, financial record are specifically created to trace the project process. Utilizing the project accounting, provide project manager with the ability to accurately assess and minor project budgets and ensure that the project proceeding on budget. The project manager can quickly address any cost overruns and devise budget necessary. Okay. Same but is again here the project accounting differ from the standard accounting at the time of period that they are reported. Same but is given, nothing is special. Again, we need to calculate the cost and revenue that are allocated to the project may be further subdivided into the work breakdown structure. Suppose बेटा फिर डिपेंड बात करते हैं in respect of the store. Suppose one of the common store and company run project 1, project 2 and project 3. If any of the material directly, any of the material purchase only for the project 1, so all the material costs be directly charged and be in respect of project 1. So this is called the allocation. Suppose if the common material, common item issued by the department in all the 3 projects, so we have to apportion. We have to apportion the expenditure according to the different type of ratio. Well, if the common expenditure is given, so we have divide all the expenses in appropriate ratio, or if the separate expenditure is given, so this is called the allocations. So project accounting allow company to accurately assess the rate of interest of individual project and enable true performance and measurement. What is the purpose behind of project recording, project accounting? To true performance of the measurement. The project manager is able to calculate funding, evidence, and actual versus budget cost variance using the project accounting. So this is called beta project accounting. Okay. Some of the characteristic is given. A definite project line, maintain nominated project manager, a specified source of funding, approved project plan and budget, and specified deliverables. Suppose that three project is there. One of the project having the 2000 flat, one of the project having the 1500 flat, or another project having the 2000 flats. Every project have the separate funding, separate project plan, separate busting. So this is the features of the project accounting. A project manager shall be appointed for each project. And the project manager responsible for both operational and administrative component of the project. Project manager are primarily responsible for recording and accounting of the project expenditure on a daily basis. Okay. Now, beta basis of accounting, recognition of the project expenditure, and we have to pass the project entry. So nothing but I see very specials. Only two type of entry we have to just pass: redemption account debit to sales, or the customer account debit to redemption accounts. Nothing is very important. Nothing is very serious. Okay, suppose a project total contract is 1 crore. Our company invoiced 90 lakh in 2018, but 10% will be invoiced after completion of the project is 2019. So the journal entry, if the 10% invoice only next year. In the profit and loss account, it is shown the separate income, sales income is called the retention. Material already consumed in the year 2018. So whenever we sell the project, so we use retention account debit to sales retention. In the first year, we receive only 90 lakh, or again, customer account debit to retention account because the 10 lakh rupees is the due now. This is two separated. So not very much more important. Okay. So now beta in the next class, not tomorrow, Friday. Now we will discuss the last units and very different type of units, the joint venture and the consignment accounting and the bills receivable BR. So sorry, BR or B bill. So we will discuss in next three class in the complete three important topic and the different topic and some of the most important topic for the job purpose also. So okay.